Welcome back. It's time for the Word on Wall Street. Top investors watching your money. Joining me right now is Dominari Securities CEO Kyle Wohl. Also with us this morning is Mark Tapper. Kyle, thanks for joining the conversation.
Thank you.
Great to see you. And I just want to reiterate, we just saw the Bank of England leave interest rates unchanged. I think I said ECB. The Bank of England this morning is out. ECB has already left rates unchanged at this point. But Kyle, I want to get your take on what we're seeing in terms of earnings. Warner Brothers Discovery first quarter earnings crossing right now, missing on revenue at $9.96 billion. However, adding 2 million subscribers from the previous quarter, Warner Brothers Discovery also teaming up with Disney to bundle streaming services, including Disney Plus, Hulu, and Max. Look at this stock. This stock has come crashing down. It is down another 2.5% this morning at $7.60 a share. Got to get your take on this. Meanwhile, Airbnb reported an 18% revenue increase to over $2 billion, predicting weak second quarter guidance. Robinhood also reporting record revenue with its income rising to $157 million at 18 cents a share. Crypto revenue there surging 232% to $126 million. And then I want to show you ARM Holdings, the UK chip makers, full-year revenue forecast missed expectations. Stock is plummeting this morning, down 8.75%. The CFO saying that the timing of the company's licensing deal can be hard to pin down, and it's impacting its guidance. Kyle, your assessment to earnings so far?
Well, there's a lot to assess right now, Maria. I think when you look at Warner Brothers, they're going to have some difficulties. There's no doubt about that. But I also think with the new Game of Thrones coming out this summer, I think in June, season 2 will be released, House of the Dragon. I think that could help them out a little bit, too. And they're also talking about maybe they've had a 2-year hiatus on M&A activity. That's over now. So they might jump in and take a hard look at Paramount, which could be an interesting play for them, because I know they're on the shopping block right now, actively looking for purchasers.
I mean, how are they going to do that when all that debt is there and the stock is plummeted in terms of adding on to the debt at Warner Brothers, you're saying?
I think they could get Paramount for a song right now. Paramount needs to sell the company.
Everybody wants it. NVIDIA is coming out, and you think NVIDIA is going to be acquisitive?
I do. I think NVIDIA, you're going to see some M&A activity, right? They're coming out at 5/22, May 22nd with their numbers. If you look at the last quarter, they had purchased about $147 million of ARM holdings. If you go back to 2020, they tried to buy ARM for $40 billion. Didn't work. Went public last year. Stock spiked. Stock hit a high of 150. This morning it's down, trading in the mid-90s. So it'll be interesting to see when they come out with their Q2 if they add it to the position or look to make some other investments like Amazon did with Anthropic recently.
Well, this is going to set the tone, isn't it, Mark, when NVIDIA reports?
If NVIDIA has a bad quarter, watch out below.
Yeah, exactly.
I mean, they have been the poster child of everything good that's happened in the stock market over the course of the last 18 months. The market has been fueled by AI and Ozempic. May
22nd. That's 2 weeks away, so we'll be watching that one, and we'll bring you the preview leading up to it. But let's talk currencies for a second. Look at the British pound this morning. The Bank of England leaving interest rates unchanged at 5.25%. This is the seventh consecutive meeting where we saw no change in rates. Look at the 10-year Treasury yield this morning, and we see the yield right now trading, I believe it was up earlier on the 10-year, and it is up about almost 3 basis points, sitting at a level of 4.51%. All of the Federal Reserve presidents, Mark, are getting in line. They're all saying the same thing, right? Now we've got the Boston president, Susan Collins, signaling rates need to be higher for longer. The recent upward surprises to activity and inflation suggest the likely need to keep policy at its current level until we have greater confidence that inflation is moving sustainably toward 2%, is what she said yesterday. Mark, your reaction?
So the BOE is certainly closer to cutting rates than we are. I mean, they've gotten their inflation down to 3.2%. Ours is at 3.5%, and inflation's accelerating here, right? It's reaccelerating. So they're doing a better job. They're probably closer to a rate cut. I agree with Susan Collins. You know, when you look at what's happening on the inflation front, the Fed is stuck between a rock and a hard place. Like, I would not want to be in their shoes right now, because they've got kind of 2 different battles they're fighting against. The first one is the economy, no doubt, is slowing. I mean, we saw GDP go from 5% to 3 point something down to 1.6%. So the economy's slowing. The job market is not looking good. Full-time jobs year over year are actually negative.
A lot of part-time jobs happening.
Yeah, right. And then you look at, on the other side, though, inflation is accelerating. So what do? How can you cut rates? And in fact, I mean, when you look at stock market performance, the market performs very well when the Fed is in a pause. As soon as you have a rate cut, The next 12 months after that first rate cut, stocks are down about 20% on average historically. So if you're an investor and you want to continue making money, you should actually be hopeful that the Fed remains in a pause.
Wow. And a new Gallup poll finds 68% of Americans expect housing prices to go up in their local areas. The same poll finds 76% say that it's a bad time to buy a house right now, Mark.
Well, that stinks. I mean, housing
That's another
affordability.
problem for young people.
It is. Housing affordability is at an all-time low, and the data goes back to 1986. I mean, you've got mortgage rates at 7.36%. That's incredibly high.
That's incredibly
And
high.
you've got the median home in the United States sitting at $400,000, while the median income in the United States is at $75,000. You need to make twice the median income to be able to afford the median home. That does not bode well for people who are just starting off in life. Maybe they want to get out of mom and dad's basement. It makes it very challenging. So this is a situation where, as opposed to being an investor and wanting the Fed to maintain their pause stance, this is a position where if you are, 23 years old trying to move out of mom and dad's basement, you want rates to come down so that housing becomes affordable again. But this is also a supply and demand issue. There was a decade or so of us not building enough homes, and there's no inventory out there as well.
What do you think about the Fed?
I think the Fed's going to stay pat, at least through the election. I think they wanted to cut rates earlier, but with the information that we're cutting right now on inflation, I don't think they can do it.
So mortgage rates stay up here, making the ability to buy a home, take out a mortgage, out of reach. I
agree. I think it's very expensive right now. The only place that you're seeing come down a little bit is Florida. That's because the insurance is going up so much.
For there to potentially be a rate cut, I mean, here's what I'm estimating would need to happen. For there to be a rate cut in September, the next 3 months, including next week, May, June, July, you would need to see CPI come in at 0.2% month over month. It's been coming in at 0.4 now consistently. So I don't see that happening. And that would be best case scenario for those of you out there who are hoping for a rate cut. You would need to see 3 consecutive great months of us managing inflation in order for there to potentially be a September cut. I don't see that happening.
All right, we will take a short break. Kyle, great to have you. Thank you so much.